Hey everyone, I thought I'd make a video on how to create the financial model using my approach. So there's actually several different ways to make a DCF, but I'm going to show you the approach that has worked for me over the last several years. So just keep in mind many different ways to do this, but I'm going to show you my way and how I apply it. So just a quick recap. Over in the Discord, a lot of resources and everything, but most importantly, I just want to break down where we can find the model templates, okay? So under intrinsic value financial models, let me share my screen actually. So under intrinsic value financial models, we're going to have two links. One is the link to the top 10 market weighted stocks, and then the other is the X top 10 market cap weighted stocks that I use for one-time trade filters, okay? So here's what it looks like if we open up the folders. So Apple, Amazon, Broadcom, Costco, all these DCFs I've done and updated on my own, and they are essentially, just let me show you here, they are essentially good to go. Let me just show you what it looks like. So here are the top 10 companies, right? Here are the X top 10 companies that I look at for trade filters, okay, right over here. And I also include data sets for people who want to make their own models. So that's what it looks like over here. So these are data sets from YCharts that you can use to create your own model if you'd like. Now, what I'm going to do is I'm going to share how I build the model, okay? So what we'll do is we'll open up the custom template page from Build Your Own Model in Discord. So we're going to open up this link right here, okay? We're going to open up this link, and that's going to lead us to this over here, all right? Okay, so we're going to open this up, and we're going to download a copy of it. And then what we'll do is we are going to create the model from scratch. Okay, so let's do it. So let me just wait for that to load. And here we go. So we have a template now. So here is our template. Just let me make sure everything's working perfectly. Cool. All right. Using this new recording software. So just got to make sure that everything's cool. So, all right, we have trip.com. Okay. We're going to make a DCF on trip.com. It's not yet in the folder. After we do this model, it's going to be in the folder. So the most important thing to understand is that there are 5 pieces of information to collect: income statement, balance sheet, cash flow, EV to EBITDA history, which is the enterprise value ratio along with the operating cash flow, and then the EBITDA margin history, which essentially tells us the profit margin over time. So these 5 pieces of information we're going to find in YCharts. Now, YCharts, I'm a professional account user on it. I know that YCharts, the service is a couple $100s a month. But if you don't have access to YCharts, you can use other data providers, or you can look at the financial data sets that I provide in Discord, because those are sourced from YCharts. So what we're going to do is we're going to import the info from YCharts. So let me share my screen just so that you can get a visual on what that might look like. Okay, so here is YCharts. All right, so we're going to open up trip.com, and in the financials tab, there's going to be the income statement, the balance sheet, and then the cash flow. So what I'm going to do is I'm going to export, okay? I'm going to export the income statement, the balance sheet, the cash flow, all 3 of them, okay? So I'll do that. So I'll export the income statement, the balance sheet, okay? And then the cash flow, all right? And here's how I'm going to input those 3 financial statements into the model. So let me show you. So let me open up the Excel again, okay? All right, so I've got the Excel, and we're gonna go to the income statement tab. Okay, you can see that the custom template has Apple here, but we're going to change it to trip.com. So income statement, let me just open that up. And you'll see that the column, okay, ends at N for income statement. So what we got to do is we simply have to get the same number of columns in the export and then copy that info over to the income statement tab that you just saw I did. Okay. So now I'm going to do the same for the balance sheet. Okay, so we're going to open up the balance sheet here. Let's see, column N. Okay. So we're going to get the same number of columns and do that. Copy and paste it, put it here. Okay. And then we're going to do the same for the cash flow statement. All right. Let's go to the cash flow. Also ends in column N. Okay. So I'm going to copy that and put it here. Okay. So very good. We have the income statement, the balance sheet, the cash flow. It's all in there now. Now the model template will pull in a lot of that data for you that I've built. So it's going to save you a lot of time. But we still need to pull in the EV EBITDA history and the EBITDA margin history. So we've done the first three. Now we need to do EV EBITDA and then the EBITDA margin history. So we're going to pull that from YCharts, and I'll show you where I get it from. So here is YCharts again. And if we go into the multi-chart tab, we can see that EV EBITDA is here and the EBITDA margin is here. So in my account, I place these two at the top because those are the two that I care about the most. So we're going to either look at a 3-year, a 5-year, a 10-year history, depending on the type of analysis that you want to do. So for our purposes, I typically use a 5-year time frame. So I'm going to export this, and then I'm going to place that data into for EV EBITDA history. So I'm going to share my screen for the Excel in just a moment. Okay. After I get the EBITDA margin history, so let me grab that for you. So here's the EBITDA margin history, the 5 years. Okay. I'm going to export that as well. And to the Excel. So I'll show you. Let me just share my screen on the Excel side now. Awesome. Okay. All right, I believe I have it here. Okay. So I've put in the EV EBITDA history for Trip.com. And I've also done the margin history over here. Okay. So Trip.com is a little interesting because you can see that the historical data sets that I've put together, the average, the max, the min, the median, the numbers are widely dispersed. Why? Because during COVID, a lot of people couldn't travel in China. And because it's China's largest travel booking agency, well, that's going to cause a lot of these numbers to be dispersed. So we need to take out outliers and things like that. So when creating this DCF model, I actually chose a difficult one to make. Easier ones to make are companies like Apple, Microsoft, Google, where there's not as much lumpiness across different timeframes. But it's okay. I want to just make this example so that everybody knows where it comes from. Okay, so now that we have the 5 pieces of information inside, we are ready to start updating the DCF template. So the first thing that we need to do is in our YCharts account, just make sure we have the proper dates inputted, meaning that we need to make sure the most recent fiscal year end is 12/31/2024. And you don't have to get that from YCharts necessarily, just make sure the information is correct. The most recent quarter end was, let me look at my platform here. Let's make sure the price recently is updated. I believe Trip.com is around 65 at the time of this recording. So what we're going to do next is we're going to look at the forecasts for revenue. We're going to look at the forecast for revenue. We're going to look at the forecast for EBITDA. So I'll share my screen so that we can see where these data points are coming from. So over here, okay. So I've got Trip.com, income statement. When you export the data, it doesn't come with the forecasted revenue and the forecasted EBITDA. That's just the nature of YCharts exports. But what we're going to have to do is we're going to have to put these values into the financial model, and same thing with EBITDA. So why don't I do that, and I'll show you how I do it. Here we have the Excel sheet again. Just got to go back and forth when I share the screen. So let me get Trip.com's data. You can see 2024 is already automatically pulled in. So is the end of 2024, excellent. So now we're going to put in the forecasted info, 8.5 billion, so that's 8511. Everything's in terms of millions. So this one's 9690, and then this one's 1088. Okay, now here's a quirk. In order to make the DCF model, we also need revenue forecasts for the last 2 years out of the forecasted 5. YCharts doesn't provide that. So we can find that information for free on Seeking Alpha. And if you go to trip.com on Seeking Alpha, and there's an earnings estimates tab, and I'll just put that info in. So 2028 happens to be December 2029 is 12890. Okay, perfect. And then I'm going to put in the forecasted EBITDA information. So that's going to be 2766. And then the final years will be determined by the EBITDA margin that we personally set as an assumption or based on the margin history. Now, the last piece of information that we need to collect is pretty simple. We just need to get Trip.com's shares outstanding because everything else in the model is built for you. Okay, everything else in the model is essentially already here. So everything is connected to the 3 financial statements. It's connected to the discount rate that we calculate. So the next thing that we need to collect is the shares outstanding. And when I look at shares outstanding for Trip.com, looks to be 650 million more or less. Okay, so we can use a round number here. So we can say this is 650 million. We'll use round numbers, okay, for simplicity. 650 million. Actual number is around 653 million, but more or less that's going to have the same kind of conclusion. Now, the next step is to begin building out the bear case, the base case, and the bull case, because all this info now is nicely pulled in from the 3 financial statements. So I've done all the custom model building for you, and those were the pieces of information that we needed to collect. So just quick recap up until this point. We put in the income statement from YCharts, the balance sheet from YCharts, the cash flow statement from YCharts, the EV/EBITDA history, which is essentially the valuation relative to the history, and then the margin, profit margin history over time, EBITDA margin over time, okay? Then we updated the forecast for revenue. We updated the forecast for EBITDA, okay? And then we changed shares outstanding, okay? Because every company obviously has a different shares outstanding count. So what we can do now is we can go to model conclusions. And these pieces of information are by far the most important that I would say to the model. EBITDA margins and valuation multiple, okay? Those two determine the lion's share of what Wall Street analysts call the terminal value, meaning the final value of the company if, okay, it were to be sold to another entity. So in other words, that's what the shares should be worth eventually, terminal value. So these 2 pieces of information will come from this tab, okay? And this is where it starts to become a little bit more subjective and a little bit more of an art. So this process, along with following the stock for a period of time, understanding where it respects support and resistance, is the nature of the game when it comes to building out the DCF. So what we'll do is we'll create a super bear case, a bear case, a base case, and a bull case. Okay, so let's start with super bear case. So how do we come up with the super bear case? We're going to logically look at where the company's had the lowest profit margins relative to its history, the lowest valuation multiples relative to its history. So if you look at Trip.com from its valuation, it's never really traded beneath, say, 9.6 EV to EBITDA. So put it in plain English, it's never traded below 9.6 as a valuation ratio, okay, over the last 5 years. So you can use longer time frames, you can use shorter time frames based on the time frame that you intend to transact for this position. So we'll use 9, okay? We'll use 9. And for EBITDA margins, we can see that Right now, as of the last quarter, it was 35, but it's ranged a bit over the last 5 years, which is why I have this historical data set, average, max, min, median. So let's assume that Trip.com, and what we can also look at is we can look at, hey, recent quarters, what are some reliable figures that we can reference, okay? If right now is 35 and we expect an economic recession that's deeper than what it already is in China, perhaps we can look closer to the difference between today and the median, maybe even the midpoint between today and the average. Like I said, this is where it becomes an art. So more or less, let's say we use 25%. Okay, 25%. So we'll put that in as a bear case. So we'll say EBITDA margin at 25%, valuation multiple 9x, and then we create a range around it. So whatever the output is, we'll do a plus minus 2-3%. Stocks go up and down. So we can do 55 to 60. Shares currently trade around 64 or so. But like I said, you can update the margin assumption and the valuation multiple assumption based on your personal interpretation of China's macroeconomy, where margins are likely to land, what the valuation multiple looks like. Now, before we continue, I had created a DCF on Trip.com a couple months ago. And when we sold off after earnings, okay, this is just a case in point, to 55.60, I recommended it to our folks and said, this is a good level. Okay, so this is where my levels come from. It's not just from studying charts. I combine technical analysis along with financial modeling, and if there's technical support at 55 to 60, and the valuation says that's the bear case, you have two very powerful confluences. So I don't think technical support, technical resistance is enough to really come to great conclusions. When you combine it with financial modeling, it becomes so much more powerful. So EBITDA margins, let's stress it a little bit more, okay, so to make a super bear case. So we had used 25 here, but let's take it down all the way to, say, the average, okay, 20. Or even beneath average, say 18. Okay, like I said, this is subjective. You can use your own figures. And when you lower margins, the multiple also contracts. We've already used the lowest one, but we can stress it a little bit more. We can use 8.5. Okay, maybe 8. Okay, so super bear case for Trip as of the current outlook and the current business standing is that if we see 48 to 51 on this name, I would consider it a super bear case. And if you align it to the technical chart, you'll see that that's probably the origin of a previous large rally. So there's confluences that I personally use when it combines financial modeling with technical analysis. When you combine those two together, super cool. Okay, so moving back to this, how do we create a base case? Well, right now it's 35%, and Wall Street estimates are that it's 30%, 33%. Now, where does this 18 come from? It's linked from here, okay? That's how we calculate the model's outputs. The terminal year EBITDA, terminal year margin, AKA the final year margins, we sort of make that assumption, okay? We come up with those figures. So 30 to 33%, that's very, very optimistic, okay? The street tends to be more optimistic. That's why stocks don't typically trade at their bull case right away, because the buy side knows that these are optimistic figures. But let's use that. So let's say, we'll look at 30%, okay, margins. And if that's the case, we'll use today's valuation multiple. You want to be very careful and shy away from using max valuation multiples. You want to be as conservative as possible. So even for a bull case, I would say a figure from today or a figure from above a median, those are more appropriate values to use, because when you stress test it enough, it gives you confidence that this is going to work. So let's say that we'll use today for an instance. So 15. So I'm actually going to put that in the bull case. So 30%, 15x, 85 to 90. So at one point I had told our community that I think the bull case for Trip.com is 85 to 90. That's exactly how I come up to this value. And it's not necessarily a scientific thing where you can pinpoint it to the T, but this is how I come up with it. I use my judgment and I'm conservative in my estimates and I stress test the values as much as I can. So when I say it's a bull case, to be quite honest, if the stock market is really euphoric, we can go well past 85, 90. But it doesn't make sense for me to put bull cases where it's currently X the price of the stock, because that's not a really realistic way to trade and invest. So let's take a look at the base case. So what I do for the base case is I typically do the midpoint between bull and bear, or you can find another statistical value from average or something midpoint between today and the minimum. Just make sure you're being super conservative about it. So let's be conservative. Let's say 26%, okay? Just 1% above the bear case, all right? We'll say 10x for the multiple, okay? Keep in mind, currently it's 14, but we'll use 10. So this is how I come up with my conclusions. I stress test them very significantly. So we'll do 26% and then we'll do 10x. And then that's gonna come up with 62. Very interesting. Because if we look at the stock price today for Trip.com, it's actually between 62 and 65, okay? So the way I stress the model, I'm sure, is how institutional investors, the buy side, how they also stress their models, because they don't want to pay full price for the stock. This is paying full price for the stock, okay? When you are buying a stock at the high end of the margin history, at the high end of the valuation history, you're paying a premium for the stock. That's why stocks can trade at the bull case, but sometimes they don't stay there for very long and they come back down, okay? If you stress the stock enough, you typically get a value that is somewhat beneath the current level, but those are areas that you can feel comfortable where there's a little bit of margin of safety. So even though China stocks have gone up a lot, Trip.com has gone up a lot, at 62, 65, it's still a base case. In other words, if it sells off from here, it would be trading at a discount. So this is a very cool example of Trip.com, DCF model. And I'm just going to recap everything. So once again, I wanted to show everybody how to create a model. There's so many different ways to do it. This is my personal approach. I would say that my personal approach leans on two things: looking at the valuation history for margins and looking at the EBITDA margins over time. Okay, so the 5 pieces of information that we need to collect can be from Y charts, it can be from another data provider: income statement, balance sheet, cash flow, EV, EBITDA, EBITDA margin history. And then, okay, the discount rate tab will auto-populate. You can put in beta if you'd like. I don't think it changes the discount rate that much. You can change the risk-free rate to the current 10-year yield. That's totally up to you, but I have this auto-populating. Most of the sheet also auto-populates. Okay, most of the sheet also auto-populates. The only thing that we need to do is update the forecast for revenues, update the forecast for EBITDA, update these dates, of course, and then put in shares outstanding. And then we begin the process to building a bear case, a base case, and the bull case. So the most important pieces of this model are these two inputs here. So you are going to be changing these two inputs in order to come up with the super bear case, the bear case, the base case, the bull case. These two pieces of information, super important. So in the model, don't change this. Don't edit that, because that's auto-populated. This is where you would edit the model. Okay, these two figures. Okay, so where do you find, these two figures? They come from these two tabs. Okay, and they come from Y charts. Now I understand that not everyone has a membership to Y charts. It's an excellent platform. If you don't have access to Y charts, well, we have the data sets for the top 15 companies across the S&P and the NASDAQ. And if members want me to include more financial data sets for large cap companies, or companies that I follow, they can send me a message and I'm happy to include that here. So you can see if we open up Adobe, the 5 pieces of information are here: balance sheet, cash flow, income statement, the margin history, the historical valuation, as you can see. Okay, so the inputs are all there to create your own model. And once again, we would find that right here. Okay, so we would find that over here, intrinsic value financial models. Okay, top 10 stocks, X top 10 stocks. Here's the template. Here are the data sets. Okay, and this is the level of due diligence that I do in order to come up with ideas like, Lululemon, JD, ARM, Micron, long list of ideas. I don't have to rehash all of them, okay? But that's pretty much the main idea. So once again, I'm just going to show you this last detail. Once we have created the scenario analysis, what we're then going to do is we're going to open up a chart for Trip.com or the stock that you've just modeled, and we're going to put horizontal support, horizontal resistance on those key levels. So as you change these values will also change. So if you want to be more conservative, you can use lower values, and then your chart will have lower support and resistance where you most likely will have more de-risked entries and things like that. Okay, so this is how I create a financial model. I'll be creating more educational videos like this over time. If you have any questions, feel free to ask me directly if you're inside my Discord. And more resources will be posted over time. So looking forward to helping you guys find great ideas in a chaotic market. And this is my approach. I hope you enjoy it. There's many different approaches. Feel free to develop your own style, things like that. But I wanted to share with you what I've been doing over the years, and every single time I issue an idea, it goes through this mechanism. Okay, it goes through this filtering due diligence mechanism. All right. I'd love for you to learn financial modeling because it's a skill set that will make you more attractive if you're looking to work in finance. But generally speaking, it's a very powerful skill set to have on top of just looking at the technical analysis and things like that. Okay. All right. Well, I hope you have a wonderful day, and I will be back with more educational content very soon.